Hello, you're welcome to today's lecture. Today we want to look at Confluence, whereby we'll be looking at the correlation between the monthly, weekly, and then the daily. Now, what that means is this: if the monthly is buying, we expect that the weekly too, we are looking for weekly structure that will tell us to buy, and correspondingly, we're also looking for daily structure that will tell us to buy. With this theory in tandem with the buying of the monthly, weekly, and daily all together, that will give us a higher probability that any trade we are going to take, it has a very high chance of playing out. Okay, any trade that we can take whereby the monthly is bullish and then the weekly is also, it's not bullish but bearish, is coming down, that trade can also play out like we see in yesterday's case study number 4, but it is not high probability. Okay, so with this, let's enter the chart. Looking at this particular chart, this is just some random chart. Okay, gain S800, all those some brokers like that. You see on this chart, we can observe that what we're having here is on the monthly, this is the previous month high taken out, and then the previous month low taken out by this candlestick formation, by this candlestick wick. After that, what are we expecting? We expect price, after taking out that previous month high, to come down and take out this previous month low. And we know that after price has taken out this previous month low, we are expecting price to pull back into this month high, either to take it out or can push into any of this place and continue to go downward. But when this happened in this place, we'll be looking for buying opportunity, right? Just like when this happened on the monthly high, we are looking for selling opportunity. Then when the monthly low is taken out, we are looking for buying opportunity. So let's go to the corresponding time frame. From the monthly now, we go to what? We'll go to the weekly. Now on the weekly time frame, our candlestick formation that can tell us to buy has just been formed after the monthly time frame low has been taken. Then we now see our week candlestick formation. Okay, what can we do? Let's notice that this is week 1, week 2, and week 3. The low of week 2 has taken out the low of week 1. Then the high of week 2 has been taken out by week 3 with body, and then the high of week 1 has also been taken out by candlestick theory. So with this, we, as much we don't take trade on the weekly time frame, okay, let's just assume that this has not played out already, because on this particular MetaTrader 5 I cannot do bar replay. So in as much we see that, let's go to the corresponding weekly time frame. Now, on this particular week candlestick formation to buy, we know that from our first strategy, which is reversal kind of trading, we can have an inside candlestick formation. Let's go to the daily. Now on the daily time frame, when we see this type of formation, for me, this is like the price has changed direction on the low of that particular weekly, the demand zone that we saw. There's now a daily demand zone that we expect price to come and tap into. Okay, you see price tap into that demand zone very beautifully, and then it went upward to take out the corresponding weekly high. Now this is where the confluence now comes in. Let's go back to the weekly. Why this is happening, why this particular demand zone on the monthly then to the weekly has been giving us a buy entry here, we see that there happens to be a weak high. Now a weak low has been formed. That weak high is now taken out by this candlestick formation. Now when that is taken out, if you go, let's now go back to our daily zone, daily chart. On the daily chart, we can see what happened here. On the daily chart, after the candlestick took out this previous week high, we can see that we now have our candlestick formation, okay, and this is a sell signal. This sell signal, you can see obviously it did not play out. It did not play out accordingly. It failed. If you enter trade here to sell, let me zoom in so you see it very clearly. If you enter the trade here to sell, it failed already. And why did it fail? Because we know very well that we are coming from a weekly demand zone. Okay, this is a weak demand zone that has given us a day demand zone entry. This trade, it is not the demand zone entry that was coming from a weak demand that gave us this trade to enter for sale. But the general aspect of this trade is to buy, because we are buying from the weekly demand zone. I hope it is not confusing. I hope you understand what I'm saying. In as well, we are buying from the weekly demand zone, and we now have another opportunity to sell here. Selling is not our calling right now, and by the time you look at it, if you take this trade from year to year, where are we going to settle before we have our 1 to 3 raise to reward? This is not a profitable trade, so therefore we can take it. It may work out just like we saw on this chart. You can see this is from our case study number 4 from yesterday, that after price has given us this month high and month low, this month low has not been swept. Then from there we have our weak demand zone that price has not tapped into, and then we expect that price will continue to buy upward by the time we go to the daily time frame. Okay, and that is what just happened, where price now is going tap into this demand zone. Okay, and price is going upward from this demand zone now, because everything is in Confluence. Monthly is buying, weekly is buying, then on the daily also we are buying. And you see, this was a beautiful trade already. If you see this trade, you already have our 1 to 3 risk to reward. Let me see. You see, this is our 1 to 3 raise to reward. Then you can now see something that happened. What happened was that while that is going on, let's go to the weekly and see. While that was going on, we saw that price formed a weak high, a weak low. Then this weak high was taken out by this candlestick, whereby we go to the daily time frame. When we go to the daily time frame, we'll now see our kind of candlestick formation, and then you see we should have entered then we can enter this trade. But when we enter this trade, we are going against the monthly that is bullish and the weekly that is bullish. Okay, you are now using the daily just to sell this trade. So this trade, although it played out, but it's not advisable, because it's not in line with the confluence that we want, whereby the monthly will be bullish, weekly bullish, and daily bullish. But in this scenario, despite that, we took it and it also played out, but it's not advisable. It doesn't have higher probability because it doesn't happen often. So therefore, let us take note. So I hope you understand what this is, just from this example, that in as much the monthly is bullish, the weekly is bullish, we can see that entering trade on the daily with respect to what the weekly will tell us, that is in counter trend with the monthly structure, it may not be profitable, and that is one reason that this trade failed. That is all about confluence of trading we are talking about. Now let's take a look at one more example. Okay, if we look at this chart, what are we seeing here? At present chart, we see that it was a month high and then a month low. Let me quickly mark it out. Okay, let's say that's a month, liquidity sweep. Then what are we to do here? What we'll be expecting is for price, after price has done this, we want price to come downward. Okay, we are looking for every selling opportunity on this trade. So therefore, let's go to the corresponding time frame, that's on the weekly. Now coming to the weekly time frame, okay, let's see what happened here. We can notice that this is the previous week low, right? this week low, and this is the previous week high. Now, on this trade already, you can see that already we have our reversal candlestick. On the weekly, we respond to the daily to the monthly time frame. This is the week supply zone, right? We have our week supply zone on this particular candlestick formation. All right, you can see it whereby the candlestick one took out, was taken out by candlestick 2 week, and the candlestick 2 was taken out by candlestick 3 body and candlestick 1. All right, so with this, we know that everything we'll be looking for in this place from this onward is going to be what? Selling opportunity. Okay, we are going to be looking for all of the selling opportunity, but you will see that something happened there. Let me try to quickly replay it. Now, so know that this is our previous week low, previous week high. Let's go to the corresponding time frame on the daily. Now, take a look at what will be happening. Okay, now you can see this, that if we are not taking, if we haven't taken note of the fact that this is from the monthly to the weekly, and this is a weekly supply zone. So therefore, everything we'll be looking for here is going to be selling opportunity. That's the Confluence. We are not looking for any buying opportunity, but you can see what happened. The after price has taken out this previous week low. It gave us our candlestick formation, and you can see it. These are the type of candlestick formation we want. Okay, the previous candlestick was taken out by candlestick 2, candlestick 1, and then candlestick 3 closes above the high of candlestick 2. Okay, now let's see. You're supposed to also close be another candlestick have to form be above the high of candlestick 1. Okay, so already we can see that this is our demand zone on the daily, because the weekly previous week low has been taken out. Okay, so we'll be expecting to buy this trade aiming from 1 to 3, right? As usual, we are looking for 1 to 3, but like I said, since we are coming from the monthly, we know that this was when the monthly previous month high was taken out. Yes, then after that we saw that previous week low was not taken out on the weekly, and on the daily, price give us our entry model to enter this trade. So let's play it out. You can see that, let's play. This was a failed trade, and one of the reasons why this trade might have failed is because we were coming from the monthly zone that had been taken out, previous month high taken out, and they're coming from a supply zone of the week supply zone. So therefore, this trade, all we'll be looking for henceforth is that since the month is bearish, is coming down, so therefore the week 2 will be coming down, and on the daily 2 we're also going to be looking for selling opportunity. Any buying opportunity as I right now on this range is going to be, a risky trade to take. It might play out just like it played out on the case number 4, but it's not advisable. You can see it from the first chart to talk about that it's not advisable. So therefore, let us stick with the Confluence that if the month is bearish, let's go with bearish on the weekly too. If the week is bearish, let's go to it bearish trade on the daily also. So that is all for today on this Confluence type of trading. Thank you.